All right, welcome to This Explainer. Look, if you sell on Amazon, Flipkart, Shopify, or Etsy, you already know that dealing with tax compliance can sometimes feel like you're walking through a minefield blindfolded. But today, we are completely flipping the script. We are shifting you from being tax-terrified to entirely tax-empowered. We're going to unlock the top GST secrets that not only keep you perfectly compliant, but actually protect your hard-earned profits.
And don't panic, because we've broken this complex topic down into 5 really easy-to-understand parts. Just follow along with me. We'll cover the basics of GST registration, how to maximize your input tax credit, the specific e-commerce and product rules, how to avoid those nasty penalties, and finally, your ultimate seller compliance checklist.
Okay, let's dive into this. Part 1, Basics of GST Registration, which is honestly a bit of a reality check.
So here is the very first thing you need to know. Not all sellers are treated equally under these rules. GST limits are definitely not one size fits all. If you're selling strictly within your own state, locally, you might actually enjoy a 20 or 40 lot turnover exemption limit. But, and this is a massive but, the moment you start selling through an e-commerce platform, entirely different regulations kick in. Suddenly, you're looking at mandatory registration from Rupee 0. Because these rules change so frequently, you absolutely must verify the current regulations for your exact setup.
Moving right along to Part 2, maximizing your profits by unlocking ITC. Because hey, GST isn't just about paying money out, it's about claiming back what is legally yours.
Let's talk about the money. Mastering Input Tax Credit, or ITC, is essentially the golden rule for saving money and keeping more profit in your pocket. Simply put, if you purchase items and pay GST on them specifically for your business, you can claim a credit for that tax. It's not a sunk cost. It acts as a direct offset against the tax you owe on your sales.
And this brilliantly illustrates how powerful this concept is. Let's look at a real math example. Imagine you're buying 5,000 rupees worth of packaging material, which happens to include 900 rupees in GST. Then you decide to upgrade and buy a 10,000 rupee printer for your office, which carries 1,800 rupees in GST. You add those two up, and boom, you have 2,700 rupees in input tax credit. That is 2,700 rupees instantly knocked off your overall tax liability. We're talking real money going straight back into your business.
But actually scratch that. Before you go claiming everything, we need to debunk a massive mistake sellers make. It's about personal versus business expenses. You absolutely cannot claim ITC on your personal home expenses. Trying to pass off a brand new TV for your living room as a business expense? No way. Zero ITC. That's a fast track to audit trouble. But if you buy a dedicated business laptop, yes, absolutely, you can claim ITC on that. The separation has to be crystal clear.
And that naturally leads us to an incredibly common myth among new sellers. I want you to really think about this for a second. Do you actually pay GST on your total sales? If you sell 10,000 rupees worth of products, are you paying tax on that full 10,000 out of pocket?
Now, what's really interesting about this slide is how simple math just completely shatters that myth. As you'll see, your actual payable GST is significantly lower than your total sales output. You take your output GST, let's use that 10,000 rupees again, and you subtract your input tax credit, say 7,000 rupees. After that adjustment, your actual payable GST is only 3,000 rupees. You see? You're only paying the net difference, not the whole shebang.
All right, let's jump to Part 3, e-commerce and product rules, platform nuances. This is where things get a bit more specific.
When you're selling online, the platform you use completely dictates the rules. If you're on Amazon, Flipkart, or Meesho, you really need to understand TCS, which stands for Tax Collected at Source. Basically, if you make a 10,000 rupee sale, Amazon isn't just going to wire you the full 10,000. They deduct a small portion, let's say 100 rupees, and deposit it straight into the GST portal under your name. So it's deposited before it ever even hits your bank account. You really have to account for this, because it directly impacts your final net payout.
Another huge nuance is exactly what you are selling. Guys, shipping a physical mug in a box versus emailing a Canva template triggers completely different GST treatments. Selling physical goods, like t-shirts or jewelry, means one set of rules and tax rates. But if you pivot to digital products, things like SVG files, digital planners, or AI prompts, the categorization shifts entirely, requiring different HSN or SEA codes. You've got to get this right.
Now, what if you're taking your business global? Maybe you're an Etsy seller shipping handmade goods or digital files to the US, the UK, or Australia. Technically, that's an export. And the good news? This opens up special GST benefits. For example, using a letter of undertaking, or LUT, allows you to export without having to pay integrated tax upfront. You absolutely must be aware of these tools so you aren't needlessly overpaying.
And there's one more critical platform quirk: multi-state stock. If you utilize fulfillment services like Amazon FBA and your inventory sits in a warehouse outside your home state, extra alarm bells should ring. You can't just ignore that. Storing goods across state lines triggers additional tracking and filing requirements and usually means you have to register that facility as an additional place of business.
Let's move to and see how this builds into Part 4, Bulletproof Compliance. This is all about the defense strategy, keeping those hard-earned margins safe from silly mistakes.
Your absolute first line of defense is a flawless invoice. There are mandatory details that literally have to be perfectly accurate every single time. The GST IN, your invoice number, the date, the product details, and the specific tax details. Listen, if you make even a minor error, say you have a typo on your client's GST IN, that client completely loses their ability to claim their input tax credit. It's a massive headache for them, and trust me, it's a terrible look for your reputation as a seller.
So, the crucial point is staying strictly on top of filing deadlines, no matter what your business volume looks like. Didn't have a single sale this month? Well, you still must file what's called a nil return. Ignoring a return simply because you had 0 sales is a guaranteed way to lose money. You'll get hit with daily late fees, sometimes 50 rupees a day, just because you failed to report that big 0. The portal doesn't care that you didn't sell anything. It only cares that you didn't tell them.
And that brings us to Part 5, the Ultimate Seller Compliance Checklist. Consider this your personal defense shield.
Here is the bonus secret for endless peace of mind: meticulous record keeping. You need to keep these specific documents incredibly well organized. Your purchase invoices, sales reports, bank statements, shipping bills, any export documents, and all your past GST returns. Why? Because if a tax notice or audit ever comes knocking on your door in the future, having this exact paperwork lined up is your biggest and best shield. It's the proof that you've done everything strictly by the book.
So, to wrap up our explainer today, it really all boils down to 3 top takeaways. Step 1, know exactly when you need to register and always verify the current rules for your specific platform setup, like Shopify or FBA. Step 2, claim your full input tax credit. Get that money back and keep your profits high. And step 3, file on time every single time, even if you literally had 0 sales. If you master these 3 steps, you're going to dodge the biggest GST problems before they even begin. So I'll leave you with this provocative thought to chew on. Looking at how your business runs right now, does your current record keeping make you feel terrified or truly empowered?